Sam Yildirim, aside from a few players, the majority of asset managers have underperformed the S&P 500 this year. So what's holding them back?
If you look at the asset management landscape, on the mutual fund side, there are a lot of active managers. And these managers, in a market that's been somewhat steady, except for the second half of 2015 and first half of 2016, the market has been relatively stable and it's been going up. In such markets, it's difficult to beat the index. But I do believe that this is a short-term trend, and in the long term, the firms that are able to generate alpha will come back in terms of valuations.
Can you expand a little bit more on the shift we're seeing from actively managed funds towards index funds? Index funds are getting a whole lot of inflows this year. People are actually worried about actively asset managed fund houses. What's your view?
When you look at the headlines, you think that active management is going out of business and the world is going to be taken over by passive management. Passive has huge headwinds, and we do believe that the increase of passive assets are going to be very significant in the next 5-10 years. However, active management is here to stay. It has to stay here because if everyone invested in passive funds, the market efficiency is going to go out the door. There's going to be opportunities for individual investors to take advantage of the situation. So I do believe that there's room for both, and active will be around for a long time.
How do you think this is going to affect M&A going forward? Do you see a lot of maybe small ETF players getting snapped up? Is that something you foresee?
Definitely. That's been going on for many years. The issue is that it's such a concentrated market. Only when you get into the niche products, there is quite a lot of opportunity for M&A. But M&A is also going to reshape the active management market. There are a lot of managers who are not able to differentiate themselves. They're candidate for takeover. There are managers who are very good at producing consistent long-term alpha. They're also candidate for a takeover.
What about liquid alternatives? For a while, these were very hot in the market. We kept seeing liquid alternative ETFs and funds hit the market. Are we going to see more of these? Because we've certainly seen a break.
I do think that liquid alternatives are going to continue to increase, but it's not at the same degree that you're seeing ETFs or some of the other new products, because they are more complex, they are harder to manage, and I think the access to such products is only really available to more sophisticated investors.
All right, so one more time, let's step back and think about who's going to be doing the buying in the asset management world and who's going to be purchased going forward.
Private equity and foreign investors have a role to play. When we expect significant consolidation in the market, that consolidation usually takes place by sophisticated investors who are willing to take a chance and willing to take risk. We do anticipate them continuing to acquire, but also a lot of traditional managers have the balance sheet to be able to do acquisitions. So they're going to continue to invest in passive products as well as acquiring managers who can differentiate themselves.
All right, well, thanks a lot, Sam.
Thank you.
And thank you for watching The Street.